Welcome back. I'm Irfan Khan and you are watching my YouTube channel, The Forex Nexus. Last week we analyzed Bitcoin with the help of supply and demand strategy. Today we will going to reanalyze that the market is respecting that supply zone or not. So let's check out on chart. Last week we analyzed BTC USD through supply and demand strategy. Today we will also analyze it on supply and demand strategy. So let's check out here. First we will draw the untested zone on daily time frame. This is the untested zone, fresh supply zone on daily time frame, and here we have this one is also untested zone. The difference between supply and demand and support and resistance is just a price where the market tested it. It's like a rope and supply is it's a zone. It's like a zone where the pending orders, the market movers put their pending orders at that point, but at resistance point it's just a price point, not a zone. So the market can break easily at that point and can give us a fake setup. So better to draw a zone for identifying setups. So let's check out on H4 time frame here. First we will check out on H1 time frame, that what's going on H1 time frame. So this is the supply zone, the yellow line which we marked on the daily time frame. But here before going to that zone, the market will leave liquidity here, like at this point, this one also, these are liquidity zones. So here the market take out these two liquidity zone by this bullish candle, but before going to down we have also liquidity zones for which the market need to take out these zones for further movement. Okay, on H1 this one is demand zone. Here we have demand zone. Basically liquidity, the retail traders are putting stop loss above their zones. Like suppose this is a, let me clear the chart. Suppose this one is resistance zone, right, and this one is support zone. You can see here this one is also a support zone. The market move up and take on these zones. Here if we put our stop loss here, at this point the market just hit our stop loss and then again it dropped. Here the market just hit our stop loss and now dropped. So before taking any trade, you just need to look about the liquidity zone. Find out liquidity zone, that where are these zones. These are the liquidities. Before making any setup, the market will must take out these liquidity zones. If it didn't, then wait for it. After that, if you can see here, let me zoom let me zoom in the chart. Here, bearish engulfing, right? But we got a structure here at this point. So here we will mark these zones. Here we got engulfing, okay, but at this point we got structure. Now remember, in bearish trend, suppose we are looking for a bearish setup, right? Always the structure will be formed on bearish candle with long wick, okay. So this is the, here we got the structure. So this is our structure area. Now we need to identify a setup here. Remember, we need full bearish candle to break this structure. First, the market will break the structure with full body candles, bearish candles, okay. Then we will mark here a gap. This is a fair value gap. Now how we will identify a fair value gap? You will identify this one as well. This, the on first candle we need to identify the lower wick, okay, and the third candle, this is first one, this is second one, and this is third one. So we can draw on top of this one, third candle, we will identify a gap here. But why we will not take a trade on this gap? Because we need breakout. First we need a breakout. If we got breakout, then we will mark this one. Let me clear the chart. Here we got breakout, okay. Now this one is the first candle, okay. This will be second candle, and this will be the bullish candle will be considered third one. So here we will put our line here, and we will get a clear gap which the market will must fill this area. So on clear chart, this gap the market need to fill this gap. Remember, the market is always make a move from one candle to another candle, I mean from wick to wick. It always cover the area, the price, it always cover the market price. But when the market leave a gap in a move after that it make imbalances, the market will retrace back to fill that gap 100%. Now there are two possibilities. Mostly traders put their entry point at this area and keep a stop loss here. In ICT concept, sorry, this is the aggressive stop loss, but the secure stop loss is above the zone here, but the risk reward is increased here. Here we can take with low risk and high reward. Now same scenario for here. What will be the next move? The market will take out these liquidities. If the market need to move upside again, it will must take out these liquidity areas. But on daily time frame, if you see here, we got a fresh supply zone, the untested zone. And remember, which one is the valid zone? The untested area is the valid zone. Sometimes the market, sometime here the market can make a fresh supply zone. Okay, once it tested, market can drop here, and if it tested again, so on second time it's also valid, but on third time it's not a valid supply zone. It's not, there is 70% possibility that the market can hit your stop loss here, even if you got confirmation on small time frame, can hit your stop loss, can turn into demand zone and can fly up. So this is the rule for the supply and demand strategy. You can you just take trades on only on fresh zones, only on fresh zone, or sometime you can take a trade on tested zone, just one time tested zone, not 2 or 3 times tested zone. Now here, and if you are a swing trader, here we will wait for the confirmation. What kind of confirmation? Let's check out on H4 and draw a trend line here. So currently the market is below the trend line. Now two types of trend line traders are drawing, body to body or wick to wick, but the purpose is that the market must test 2 or 3 points. So here we first, second, third and the fourth one. Now at the moment it's looking the market is moving below the trend line, it's looking broken, but we need to we need to wait for the closing this candle. On H1 time frame, here we got a breakout as well. If you can see here, if we make it more correct, the possibility will be open now for a sell opportunity. So probably the Bitcoin can drop to the nearest demand zone on daily time frame here. Now this is a untested demand zone here. Possibly the market can drop here. If the market got breakout here, then the next demand zone is this one. Okay, after that it will drop more, but remember, weekly demand zone is still waiting for a test. At least once the market can drop to the weekly demand zone, and the more investors are looking for this zone to buy from the dip. So this is Bitcoin overview. last week we analyzed, but at that point the market was still looking up, and we will wait for the testing on daily supply zone. So here we got the rejection. Also we got a trend breakout on H4 time frame, as well as on H1 we got the fair value gap here. At this point, this is fair value gap here. This is the area. Last week we analyzed BTC USD through supply and demand strategy. Today we will also analyze it on supply and demand strategy. So let's check out here. First we will draw the untested zone on daily time frame. This is the untested zone, fresh supply zone on daily time frame, and here we have this one is also untested zone. The difference between supply and demand and support and resistance is just a price where the market tested it. It's like a rope and supply it's a zone. It's like a zone where the pending orders, the market movers put their pending